Hey, it's Coach JT here, and just want to say thank you so much for tuning in today. And wanted to share something with you that's just so critical and important to your foundation. And what I've done is taken the concept, and I'm going to take all the different concepts related to the millionaire real estate agent and apply them to the mortgage business and mortgage professionals. And how do we think a million? How do we earn a million? And how do we net a million as mortgage professionals in the mortgage industry? And a lot of the concepts and principles and systems that are part of the Millionaire Real Estate Agent book are identically applied to what we do in our profession. So what I've put together in this spreadsheet for you here is the basic formula, what's called the economic model in the Millionaire Real Estate Agent model, and we call it now the economic model of the Millionaire Mortgage Loan Originator. And in order to complete this step, it's really the first step in the model if you look at MREA. And the first step is to come up with, what do you really want to net from an income perspective? And all the items in blue are the items that you can adjust and change on this spreadsheet, and the only ones that you really want to change. So if you want to net $1 million in income, if you want to net $500,000 in income, if you want to net $100,000 in income, whatever that may be, you put that in here at the bottom. And that's really step one and kind of where you start here. And then step two is you want to look at your percentages in terms of, over here on the left-hand side, we have purchase loans, and over here on the right, we have refinance loans. And what's going to be your split? What is it currently? You're better off to use current numbers if you know what they are in terms of your percentage split, and you might have to go back and manually calculate those, and unless you're sophisticated enough and you've got a database and a CRM system already in place that actually tells you all that stuff. And we're in the process of building that now, and we're going to share that with you in an ongoing series as we start to build a mortgage loan origination business and a team to basically net $1 million in income. So over here on the left-hand side, you start with your percentages. 75% is what our percentage is of purchase loans that we want to focus on, and refinances will be 25% of our business. And then we look over here at the items in blue. So you've got a conversion rate between the numbers will automatically calculate here in the spreadsheet. So if you need to net or want to net $1 million in income in this example, we need 349 purchase client appointments, which averages about 29 a month. Of that, conversion rates say that we'll convert about 85% of those into applications taken. And of those applications taken, 85% of them actually will turn into purchase loans. Now, these are rough estimates, if you will, based on a lot of the Millionaire or the MREA modeled numbers. And we're going to go back and calculate all of our stuff and then build our systems this year. So we'll know every single week, every single month, exactly what these percentages are, and tracking these specific metrics, if you will. So we look at our average loan amount that's closed is $200,000, and that will automatically calculate the purchase close volume. So given that we want to net $1 million and 75% of our income is going to be derived from the purchase side of things, then that will give you a number of $50 million in closed purchase volume. At a 1.5 commission rate, that'll tell you what your gross revenue is. Then on the right-hand side, it's the exact same thing for refinances, right? 185 refinances, 70% can get converted, which is probably a little bit low. Quite frankly, we convert a lot higher than that. But in this example, I wanted to be a little bit more conservative. And then of those apps taken, what's our conversion rates to close? And again, we can raise that up, and we probably will raise that up a little bit because 65% is a little low. And so you can see it's the same thing going through here, and then what our closed refinance volume is, and then our commission rates, and then gross from there. And then over here, it breaks it out per month. So of the consultations of 185 for the year, this is based on an annual 12-month calendar. This is how many we need per month, and here's the totals per month, basically between the purchase loans and the refinance loans is what you see over here. And then down over here in this right-hand corner box, the blue items are what you'd want to change, which would be your expenses and your cost of sales. So if you haven't gone through your budget model yet, and that'll be one of the videos that I'm going to cut for you here as we go through ours and put together our P&L and actually figure out what are our current actual percentage of cost of sales and what are our current expenses. So stay tuned for that next video. And then what you see here is a gross, and it'll mine it off your gross minus your expenses to give you your net. Obviously, we backed into this thing starting with the net income. So again, start here with your net income. Do your percentages here in terms of your purchase versus your refinance. And always remember that it's better to use your actual numbers that you currently have. And then if you need to tweak it from a forecasting perspective, you can. Thanks so much for tuning in. And I look forward to talking to you real soon as we show you how to build the Millionaire mortgage loan origination practice.